The Nigerian Stock Exchange ended 2020 as the best performing stock market in the world, a return of 50.03%. But how will things play out on the trading floor or in the year 2021? Well, the Nigerian equities market ended the first trading day of this year on a bullish note yesterday, 2.18%. The all-share index closed 41,147 points, 31 gainers, 2 losers. But will the bullish run continue? Let's get market analyst Rotimi Fakayejo to discuss this a little bit further. Rotimi, it's good to see you in the new year. Welcome.
My pleasure too. Good morning.
You folks made a whole bunch of money last year. So, what do you think we're picking up from where we left off the market on a roller coaster? What do you make of yesterday, the first full trading day of the market?
Well, it was quite a good one for the market to start, and everybody actually anticipated a continuity of what we saw in towards the close of the year. But be that as it may, I think looking deeply, there is still a whole lot of upside for the market, as what we saw last year was just an outcome of bullish trading in just about 2 sectors. That is the industrial goods and the ICT. And with those 2 sectors alone contribute to more than 60% of the entire market capitalization. So that having such a leap for the year is quite commendable. Looking at what it is right now for the year 2021, I believe there is a lot of upside for the banking sector stocks, which has always been the traditional market movers. And I believe with the way the market has started, it's going definitely to give a lot of people hope that things much better are going to come up as we move into the year. So I think the bullish run definitely will continue. It may not be at the same pace of 1%, 2% on daily basis, but by the time we aggregate it towards the middle of the quarter or the first quarter, we'll see that the market has actually done well.
But the last time the market had what we call a blockbuster return was in 2017, and I'm sure you remember, when we ended the year over 42%. There was a pullback in 2018 when the market busted. So do you expect the same pattern to play out this year? Is it different this time around?
Well, I think what makes it different this time around is that, like I said earlier, that we still have a lot of upside for some sectors that have not really been impacted positively with respect to what we saw towards the close of the year. And in another vein, I think for 2017 ending into the year 2018, what actually resulted in what we saw was a negative rumor going about the street then concerning the fact that banks were not going to pay dividend for that year. So that made the market to plunge, and a lot of foreign portfolio investors actually pulled out of the market. So one other good thing that is happening for the market right now is the fact that a lot of foreign portfolio investors are not here. And to me, in a great way, it's good for the market because we've seen a lot of stability and a steady upward movement for the market. So we are not going to see a situation whereby somebody is running out with so much cash, having made so much money. So the market definitely will most likely be sustained, at least confidently, for the first quarter of the year.
Rotimi, I've had a privilege of speaking with you over a number of years as a stockbroker and as a journalist on this side. So look at 2020, local investors took the lead. If you look at the November market report by the Nigerian Stock Exchange, the local investors beat foreign portfolio investors significantly. Do you expect this trend to continue in the new year 2021?
Well, it depends on how the market space is here in Nigeria and also globally. If the lockdown continues in the Western countries, then definitely we may not expect much of the foreign portfolio investors to come over here. So what that implies is that the local investors within the country will continue to take the lead, and definitely that will imply so much. To me, I believe the foreign portfolio investors, yes, they may be good to come around, but I've not really seen a substantial value which they add to our market. You come in with about $100 million, you go back with about $120 million, having made so much appreciation, and you create a hole of about $20 million in our own economy. Not if it were to be IPO that they invest into, then definitely it will have been a different thing entirely. But for me, I believe that the market is what we should really look at. And the foreign portfolio investors, I believe, they should better reduce their participation in this country, because we prefer foreign direct investors to come rather than foreign portfolio investors. That is why you see serious-minded economies. They don't allow short-term funds to come into their system and destabilize the entire system. So I believe Nigeria should take a cue from this, encouraging foreign portfolio investors to stay here for maybe 6 months, 1 year, 2 years. I think it should better be discouraged, just as we have it in places like China.
One thing that we haven't seen as much on the Nigerian market was what you called initial public offerings in recent years. I mean, companies coming through to float new shares through the market, what you call offer for subscription or offer for sale. That's what the initial public offering really means in that sense. So why do you think that this is so? Do you think we'll be able to, do you think we'll see an improvement in 2021? What do you think will be the catalyst for what you call the primary market offering in the Nigerian stock exchange?
Well, I think what happened in year 2020 continue into the year 2021 may actually be a catalyst. And I tell you that the reason why people will not subscribe to IPO is the experience they had during the global meltdown, 2009, 2010, whereby investors put in so much money and they have nothing to show for it. And for me, the only catalyst that will ensure proper participation in IPO going forward is more stability and less volatility within the system. If a market does a plus or minus 5% over a period of time, it's quite acceptable. But when we see a situation whereby you buy a security at about 10 naira, and then in the next 2, 3, or 1 month, you see the same stock trending at about 30-40% down the price that you actually moved in, then definitely you will not be encouraged to come into that market. We try to talk to a lot of people. All they tell you is that what I saw in 2009, I don't want to repeat. So if they look at a steady period whereby we see a continuity in what we're able to achieve in 2020, then definitely we'll see much more participation in IPOs.
IPOs are companies coming into the market. So give me an idea of sectors where you think we can harvest some initial public offerings, companies that will want to list on the stock exchange, do a public share offering, either offer for sale or offer for subscription, and they can use that as a window into the into the equities market.
Well, I think we already have quite some saturation in the banking sector stocks. I think what may draw investors, or the areas that can actually be assessed, is agriculture, agro-allied, then the industrial sector, and also ICT. Then maybe you move a little more into the entertainment industry. I think these sectors will definitely move the market. And the oil sector, I don't think is really anything to go by now. We are not even seeing more new entry from that particular sector. So the agro-allied, ICT, entertainment, and a bit of those other product industries in the real sector.
Yes, I think I agree with you. The fintech guys should step up to the plate. There's a whole lot of companies within the fintech space. I think some of them should just come to the market. But I'm sure those folks are working on it at the stock exchange. Let's piggyback a little bit, Rotimi. When you talk about the foreign portfolio investors, do you think FX liquidity, that concerns, which remains all through 2020, will continue to be a factor for them when they want to exit? There is no enough dollar on the table for them to go and come back at any other point they want.
Well, they're always sitting on the fence in the sense that they want to see what intervention or the extent of intervention that they're going to see from the CBN. And I think over the years, we've seen a lot of intervention from the CBN. But I think recently, we are seeing a situation whereby the CBN is almost giving up and allowing a free market interplay. And that is why we are seeing the Naira nosedive so much within a short time. So if that definitely is going to continue, then that may not be a good attraction to the foreign portfolio investors. Because you come in at a time when you're, the Naira, when the dollar is about maybe 390 Naira, and maybe as at the time you think you have made a profit of about 15-20%, the Naira is already about 460. Then definitely you have made nothing at all, coupled with local inflation. So I believe strongly that they may not really be attracted for now coupled with the fact of what they are facing out there with respect to the COVID-19.
A very quick last question, Rotimi. So we go back to the local investors in the local market. Charity beginning at home. Yeah. That's the way I put it. So this is this obviously very important and critical to the local economy?
Well, I think there is still so much sensitivity and sensitization that we need to do in the local space. And the number of Nigerians that are actually in the capital market, equity market, is really is ridiculously low. So we need to do more sensitization to investors, and also for them to be convinced that what they buy, the value is not going to erode while they are still watching to make further investment. So I think we have enough investment. We have investable fund in Nigeria to actually sustain the equity market. And I believe the more we reach out to investors, the better it is for the market. So going forward, I believe that the local investors hold the ace to actually determine how the market will be in years to come.
So a quick one, when you look at the local investors, institutional and retail, are you seeing a surge in retail investors, folks with 5,000 naira, 50,000, 100,000 naira in the market?
Well, I think that is the extent to which we've not really done enough, because we should be able to deploy fintech to actually draw more and more retail investors. These are the people that actually sustain the market. If we can get about 200,000 people together to sell on a day, but we can get a single institutional investor that can actually dampen the entire thing that is achieved within a week. So if we deploy more fintech, we make the market more accessible, whereby people can stay in their home, open an account through a stockbroking firm with the CSCA, buy without a physical interface between them and the operators, then definitely we are going to see the market turn around so fast. But as for what we have right now, the bottlenecks are still there, vis-a-vis the KYC that needs to be put in place. But I believe a lot of these things can actually be deployed through ICT. And I think if we come out with more robust apps that can actually do this, then definitely the market will take a leap. So the retail investors will actually be the one that will sustain the market, but the institutional investors are the one that will drive the market.
Rotimi, let's just go ahead and do it. This is the year. Let's sustain 2020 with everything we can. Thank you so much, market analyst Rotimi Fakayejo, speaking with us on Global Business Report.